Good morning and good afternoon, everyone. It's Allie Peters over here in Scottsdale. Thank you for joining us today. We're so lucky that we have Dan Hardy with Principal's Business Markets Division, and he's going to walk us through all of their business principal solutions that they have available to us. A little bit of housekeeping at first is I would just like to have you ask any questions into the chat box, and I'll make sure to address those at the end. So save your questions, type them in, and don't worry, we'll get to them at the end. And without further ado, I'll give Dan all the time he can so we get you in and out in at least 30 to 45 minutes. Go ahead, Dan, take it over.
Perfect. Thanks, Allie, and thanks everyone for joining the call here today. As Allie said, good morning, good afternoon to everyone, depending on where they're at. My name is Dan Hardy. I'm one of the Business Markets RVPs here at Principal. I work with Allie and team across the country, so I'm really thrilled to have that relationship and to help you all on the phone with these types of solutions. We've really built our business platform at Principal around what business owners' concerns are and where maybe some of their holes in their current plans have arisen quite frequently over the years. So that's kind of, we build the plan so that you can work for your clients, because ultimately that's who we all work for. So wanted to walk through a couple of tools here today and do that via case study. So I'm going to flip to the next screen here, which is two of our flagship services that many of you on the phone probably have heard of or tried. If you haven't looked at one of these services, I would stress that this is an invaluable tool for your business owner clients you're working with, and it is one of the best ways to enhance your relationship with those business owner clients. So the two services I'm talking about are the informal business valuation and the buy-sell review. The informal business valuation, we found that about 60% of business owners don't know what their business is worth, and they've never known what their business is worth. And if you're looking at exit planning or monetizing that value of the business or transferring it and protecting the value of the business, it's a huge quandary when you don't know what you have. So we started doing a number of years back, a team of CPAs here in Des Moines does an informal business valuation. We make it simple for you and for the client. So I'll walk through the process here in a moment. I do want to kind of talk about some of the best planning recommendations that we see being implemented as a result of these services. The second service to talk about is the buy-sell review. So that written continuation for the business, written continuation plan for the business, if something should happen to one of the business owners. And the items that we're really looking at here are, I call them the 5 Ds. So if something happens to the business owner by way of death, disability, the dissolution of the business, the divorce of a business owner is one that's quite commonly missed. And then maybe partners are in business with an ex-partner's spouse or potentially a spouse's new partner. We've seen the gambit there. Then the last one is going to be the departure of a business owner. And departure, we're really looking at a voluntary departure, typically retirement, or the forced exit or departure of a business owner by way of maybe they lost their medical license or no longer able to practice law, or they just did something unethical that the other business owners have included in that buy-sell document that would force them to sell their shares of the business. Those are the 5 things we're looking and addressing in obviously much greater detail in that buy-sell review. So the informal business valuation and the buy-sell review are complementary. We provide through CORE, so it's available to you and your business owner clients on a complimentary basis. The best planning that we've seen, especially this year, that's coming from these results or from these services would be retention and retirement income and succession planning for businesses. So when we're talking about retention, retirement income, we're really looking at dealing with a red hot labor market, especially in some pockets of the country like Phoenix and maybe some spots in Texas, but really business owners everywhere are getting pinched because of that labor market. Record unemployment, record level of employees quitting their jobs to go work elsewhere or to start their own business. Those are just a couple of the stats that really feed into why retaining key employees, once you find that right person, have really taken off over the last year or two. And then lastly, just the owner. They're looking at most times the business is their most valuable asset in retirement. And so making sure that we have a strategy to go from business value to retirement value. And if their business was not worth as much as they thought, making sure we can account for that by way of other retirement planning strategies, usually of the non-qualified nature. And then lastly, the succession planning. We want to look at strategies as part of these reports and services to increase the business value. Again, whether it be retaining a key employee, that's going to make a business more valuable, because a buyer of the business is going to know that CFO is retained by the business. And then again, retain management team during the owner departure. That's a big concern for a lot of these individuals. And many times we're looking at retaining management by rewarding them with shares of the company. So there are a lot of different strategies to retain management, many of them which not only retain the individual, but can provide for at least a portion of the business owner's exit in selling to those key employees. So the process for these services, it's again quite simple. You'd provide information, so it's a short one-page request for proposal. It's the same for both the informal business valuation or the buy-sell review. It's 10 questions. And this is just information that we can't glean from the tax returns. The other information piece that we need are financials. So typically it's 3 years of tax returns, 3 complete years of tax returns, or income statements and balance sheets will work as well. And again, we don't need the personal tax returns. Many times people send that in. We need the business tax returns. Once we have that information, if you're looking at an informal business valuation, it's about a 7 business day turnaround time. If you're looking at a buy-sell review, it's about a 15 to 20 business day turnaround time. And that's really because we have a couple of attorneys that will review those documents, each document that comes in. So one attorney reviews, and then a second attorney will peer review the document and the summary and pitfalls that first attorney identified in the agreement. Once that's done, we don't just send it to you and say go. We would set up a conference call with the attorney or CPA and the member of my team that worked on that solution or the proposed solution from the report, as well as your contact at CORE, to make sure that you're fully aware of what pitfalls there are and what planning recommendations are available. Usually we then will offer you the option of having the business owner client himself or herself join a second call to walk through the report. Again, their CPA is welcome to join as well. That's really at your discretion. You're the captain there. I would urge you to take advantage of that call, because it really pays dividends with your business owner clients. Then we'll look at implementing the plan. So they said, you know what, buy-sell planning is my number one thing, and I don't even have a buy-sell. That's going to be step one. And then maybe it's, we've got to retain this key person. That was my second priority. And then the third one is, the business isn't worth as much as I thought. I want to look at a plan to make sure I have enough when I retire to not sacrifice my lifestyle. So implementing the plan and having kind of a clear timeline as to when that plan would be implemented. And then, as with anything, a plan that's drafted today and implemented tomorrow isn't that great unless it's reviewed the day after next, and on at least an annual basis. So again, reviewing and updating for changes in ownership, value of the business, those types of items. So we'll jump in to just a quick case study here. So this would be a pretty typical business that we're seeing. Usually these are 100 employees or less that we're working with. We do have a lot that are well above that 100 mark, but the typical business is going to be below that, established maybe 10 years ago, and a pretty successful business at that. So this particular business was a chemical company. It was taxed as an S Corp. 50 employees and 4 key employees. It were really critical to the lifeblood of the business. They were, I think a couple of them were chemists, and then a few others really managed the relationships that chemical company had across the country, and I think one may have been a quite young salesperson as well. Their goals, as you see on the screen, maintain and grow the business. They wanted to transition that business to the business owner's daughter. They wanted to reward those 4 key employees and make sure that they stayed with the business because they were invaluable to the success of the business after that transition had occurred. The owner wanted to go out on the golf course and didn't want to get pulled into the business unless it was absolutely necessary to help out with his daughter. So we wanted to make sure that that plan really hinged on keeping those 4 key employees with the business. And then lastly, continue to increase the value of the company as we led up to that transition frame. So without knowing what the business was worth at that time, they decided to start with that informal business valuation. So as part of that report, we look at the 5 most common methods of valuation. You see them on the screen here today. We look at more on the left-hand side, adjusted book value, which is more of a asset-based approach. And then on the right-hand side, we're looking at more of an income-based approach. We provide all of them and say which one is the most appropriate based on that specific business. So you'll have different recommendations on what the value of the business is, different methods of valuation if it's a construction company or a chemical company in this case versus a law firm. So it's important to look at all of them, but we do identify which is the most appropriate method of valuation for that specific company. So the first solution, again, the key employee retention really was in line with all of the goals of growing the business value to transition it and making sure they stayed with the business after the transition occurred. So they looked at one of our key employee retention strategies, which is a deferred compensation strategy. It's called the DC SERP, or Deferred Comp SERP. And that is a simplified 409A plan. So what we did is we took all of the ways that you can retain a key employee and bells and whistles you can put on a 409A deferred comp plan. We do a whole lot of those. We took some of the most common retention plans and we boiled it down to a few options for that business. And we said, if you choose from these options, we can administer the plan not for $5,000 a year, but for $0 a year. So this plan is a corporately owned policy that's informally financing a promised benefit to an employee in the future. Now that benefit's paid typically at separation of service, which would be retirement, hopefully in this case, over a 10-year period. So it levelizes that income for the executive. So it's a great, great plan when you're looking at supplemental retirement income for those key employees. Now the golden handcuff comes into play with one in the plan document. There are vesting options, and you can look at graded vesting for 5 years, cliff vesting up to 10 years, or actual cliff vesting at retirement age, which is specified in this plan, or in this case, as 67. So what we administer is what that liability that's going to be paid to the employee will be if he or she vests in the plan over that 10-year period that they'll be receiving retirement income. Now it's because the life insurance, which is the asset that's informally financing that plan, is owned by the company. You've got some key person death benefit that's built into the plan. You've got a tax beneficial asset on the company balance sheet as a cash equivalent. And it provides for a future tax deduction for the company when they pay that employee out at separation of service. So that was a great plan that we put in place for this potential or for this specific case. Now, again, how it works, I think we walked through this a little bit, so I'll walk through this quickly. Employer-owned policy, you can look at a split dollar agreement during the service period, so a portion of the death benefit goes to the company for key person to hire and find someone else to fill that spot, and a portion goes to the spouse of that key employee. Policy is owned by the company, so they're the premium payer, and the cash value is the company's. Again, looking at financing that agreement to pay off that employee. This would be a sample model for you. And I'm not going to walk through all the numbers here. I think we've kind of touched on how the plan actually works. This would be, once you have a case that you're looking at, we'd put this together that shows in columns 1 through 4, it will show the liability that the employer has to the employee based on whatever their contribution is and whatever account balance interest rate they're going to provide to that key employee. And lines 5 through 8 is going to be that asset that the employer has. So again, same policy outlay. It'll show the cash surrender value and the net accumulated value, as well as that employer death benefit. And then the last little section of that report is going to be 9 through 10, and that's going to be that future tax deduction. So if the employee is vested and the employer pays out what they have to pay that employee by way of their liability, they get that future tax deduction of, in year 5 as an example, $54,000 roughly. So the total value to the company is the cash value of the policy and that future tax deduction. So it's a great plan for the employer and a great plan really for the employee as well. Now, with this case, we had some younger individuals. So we were looking at accelerated underwriting as one way to get the plan through underwriting on a speedy basis. So accelerated underwriting, if you're not familiar with it, is something we've been doing for, well, we are the pioneer of accelerated underwriting or expedited underwriting programs. We're doing it for a number of years. I think we have, it's available for up to $1 million of coverage, and it is available for individual and business cases. All types of products that we have, from term up to indexed universal life and COLI products, are all built for this accelerated underwriting platform. So in cases like this, it is an option to consider to speed through underwriting if the client is field underwritten as healthy. So the plan what the client would see would be a short telephone interview, a prescription history check, a motor vehicle report check, and an MIB check. And based on those 4 pieces of information fed into an algorithm, we'd say, yep, this person is approved at preferred, super preferred, or standard, super standard. Or we'd have to go back and do the typical life insurance underwriting with your analysis and blood draws. So about, I would say 50 to 60% actually of individuals will qualify for that. Again, as long as you're field underwriting using kind of a quick checklist that we have for you. These go incredibly quickly, especially when you have a motivated client to get things done for you. So just one underwriting way to make the plan go smoothly and quickly. Now, I mentioned the owner wanted to do something not only for himself, for the key employees, but also for himself. And as an S Corp owner, he can't participate in a traditional deferred compensation plan. So just to take a step back, a traditional deferred compensation plan, many of you may be in them. Many of your customers are probably in them, so you're probably familiar with them. But if you are an S Corp owner or a flow-through business owner, like an LLC member, taxed as a partnership, sole proprietor, those types of businesses, you can't typically do a deferred compensation plan in the truest sense. And so I'll single out the S Corp owner. So an S Corp owner gets paid in 2 different ways. They have a W-2 payment that they send at the beginning of the year, and then based on the profits of the company, they receive a K-1 that flows through to them. Now, both of those are taxable income. The K-1 is not going to be subject to payroll taxes, but that W-2 would be. So if I'm a S Corp owner and I reduce my W-2, I've paid myself $80,000 instead of $100,000, that $20,000 is at the company level, and it's just going to flow through to me on my K-1 since there's no retained earnings in that company. So traditional deferred compensation doesn't work very well for one of those flow-through owners. So a plan that we have been doing a lot of these last couple of years specifically would be the S Owner Bonus Plan, which is a Section 162 bonus plan. It allows that business owner to do something for himself specifically and not for everyone else in the business. Provides them with tax diversification because they likely have a qualified plan that's going to be taxable income to them. This is going to be tax-free in retirement income. So they can draw from different buckets based on each year's medical expenses and the like in retirement. And it does provide for some protection because we're utilizing life insurance as the financing vehicle behind the plan. So how it works, S Owner Bonus, during the accumulation phase, it's a personally owned policy by that S Corporation owner. He or she, he in this case, makes a contribution, and he can choose from W-2, like I talked about, or a K-1 distribution. May have a little bit of payroll tax savings with the K-1, but you do have to have it in proportion to the ownership of the business. He was 100% owner of the company, so he chose to do a K-1 distribution in this case. Now that K-1 distribution, premium dollars, goes into the S Owner Bonus Plan, whatever type of life insurance product you'd like to see there, whether it be current assumption or IUL as examples. Grows tax deferred, and then in the distribution phase, the owner says, I'm going to fill out one form one time, and that's going to say how much money I get out of that plan each and every year until I've exhausted everything in that policy. Now, once the policy is taken all of the basis out and we have the maximum loan on that policy, we then have an overloan protection rider that's going to kick in to make sure that policy doesn't lapse, because if the policy lapsed, and many of you are probably thinking you've seen this or heard about cases that this has happened, if the policy lapses, the client gets a 1099 for the growth inside that policy. So it's a very important thing to make sure the policy doesn't lapse. As I mentioned, we have a full product spectrum that can help with any of your business planning needs. I'm not here to bore you with product on a specific to Principal, more of a conceptual discussion here today, but this is the spectrum that we have from term on the protection side to GUL all the way up to your, again, COLI and VUL type products. This product, I'll bore you a little bit now, was the indexed life accumulation product. And we looked at this policy because it's a maximum funding type strategy, and that product looks great for 75% or more of MEC. Now, as I mentioned, the plan that's put in place today is a great plan, but it's a fantastic plan if you're monitoring it and taking care of it tomorrow. So one of the biggest value adds that we build here at Principal are the administrative services that we provide, especially for business cases. So that takes place with this case, helping determine the right solution. As we talked about, we didn't wade through some of the options. We just kind of jumped to what was actually put in place. But with the retention of the key employee, for example, there are a lot of ways to retain a key employee, and we walked through and explored all of them. The owner just decided on that DC CERT plan. Helping with plan enrollment and new enrollments, we have cases, and one of my favorite cases I talk about was a plan that was put in place in 2011 with about 10 lives, and now it's grown to just over 100 lives, and it was on a guaranteed issue basis. So not all plans have grown that much, obviously, but that's one that the broker has really been successful with in adding those new enrollments as new employees come into the business and new owners come into the business as well. The plans are all available online to employer and employee, if the employee obviously owns the policy, for example. List billing, so multiple plans were put in place with this case. They don't get multiple policy statements and premium statements. They have one billing statement that goes to them, and then one ongoing plan level report that goes to them on an annual basis. So it's a great way to really differentiate yourself, as now you've got that every single year going out to the client with your information on it, saying this is the plan that you put in place for yourself as the S Corp owner and for these key employees that you're looking at retaining them. So just a great way to really add additional value. So with this plan, the results, what you're probably all after and what you're wanting to know, because sometimes these take a little bit of time. We hit the easy button as much as possible, but they do take some time. So the deferred comp CERT between those 4 key employees was $120,000 of annual premium. The S owner bonus plan was $100,000, so $220,000 total there, and then another $25,000 for some additional planning, more on the personal side, and obviously then a great relationship for that broker now that he has 4 new individuals that he's meeting with to really make sure they're comfortable with that DC CERT. So you got some organic growth that takes place there. So all in all, about $245,000 of premium for this specific case. Now, this was a great case. I wish they all were like this. Our average business case that we see is just over $12,000 of premium. So still a good number, but cases like this are definitely nice to have as well to help those numbers jump up. So that kind of walks you through a couple of those services and consultation items that are available to you, again, through CORE. We really appreciate the partnership and just can't say enough good things about them. Allie, I'm not sure if we wanted to open it up for potentially any questions, or if any comments or anything you would like to add, feel free to do that at this time.
Yeah, no, I don't, nobody's written any questions yet that I can see, so that's good. One thing I just want to encourage everyone to do is please do reach out. They have so many great programs that we need to be taking advantage of. Their business solutions, the whole program, we've looked deeply at it, and we really encourage everyone, if they have an opportunity or they're wondering if they have an opportunity, to either call your relationship manager. You can get in touch with me, and I can connect you with Dan. He has the sales desk number or the hotline there listed for you, so write that down. We want to make sure we're taking advantage of everything that they have to offer for CORE and all the reps that we work with. So we thank you so much for your time today, Dan.
Absolutely. Thank you for having me.
And then I think I'll let everybody go since I just got a question in.
Perfect.
Of course. That's good. It's okay. Let me get it bigger here. How long does the business evaluation take once the information has been submitted? That's a great question. Thank you, Chip.
Yeah, so that is 7 business days, 7 to 10 business days once we have everything, for us to put that report together. And again, you're spot on that it is a full report. In the first portion of it is the valuation and all the calculation, but then it's customized planning recommendations like we saw in the case study today, that you've got key employees, here are a couple of ways to retain them. You're an S-Corp owner, here are a couple of ways that you can look at some supplemental retirement income. So not only does it come with the valuation itself, but it also comes with 6 different customized planning recommendations for them based on the size of their business, number of business owners, the tax structure of their business, and those types of things. So it's a great report. Again, it opens up a lot of sales opportunities for you, and a lot of needs, unfortunately, that are just being unmet for business owner clients.
Perfect. Got another question. Would an S-Corp owner about to sell his business this year have any options?
For retirement income, probably not. Potentially, I mean, if they're young enough. So a few more details would be helpful in that, but they can obviously do personal insurance planning if they're selling their business and they know who they're going to sell it to. Potentially doing an installment sale might be helpful for them. If they haven't sold their business yet and they do know who they're going to sell it to, gosh, I'd want to make sure I have some insurance in place on that individual, just in case they don't. They kick the bucket before that transaction actually occurs. So it just depends on a lot of things. But from a supplementary retirement income standpoint, if they're planning on selling the business soon, it might be a challenge. The other thing that's important to note is from a valuation standpoint, this is an informal business valuation, so it's not to be used for an immediate sale of the business. It's to be used for planning for those longer term events, not for that immediate sale.
Right. Adrian's kind of, that was his question, or her, I'm not sure. I have not met Adrian, but it's 74 high net worth, 2 million lump sum. I think the best thing, Adrian, for you to do maybe would be to give us a call, and we can connect you, and maybe we can talk a little bit deeper into details of that specific case, since it is sort of a case-by-case basis. I have another question that popped in.
Yeah, that's how a lot of these cases historically started. Hey, I've got a guy, or I've got a gal that owns this business. What can you do? And here's a few pieces of information. What else do I need to go find? And that's a perfect fact pattern that we're happy to dissect and dive into more details with you.
Great. Chip also asked, I think he's asking for time frame for a buy-sell agreement review.
Yeah, so buy-sell agreement review is 15 to 20 business days that we see. Again, it's we have an attorney that reviews that, and then another attorney that will peer review that. Just because those are such important documents, we want to make sure that We have a couple of people that have set some highs on those documents, and some of them get pretty complex. So yeah, 15 to 20 business days for those. Good question.
Okay, perfect. Let me see if I've got any other that popped in. I think that's probably it. Again, I would just encourage anybody that has a specific case they want us to look at just to give us a call, and we'll make sure you're in good hands. The recording of this webinar will be available on our website, so if you have anyone in your office that you'd like to share it with, I'll be sending out a link with information, and we'll have supporting documents from Principal available to you linked through the website as well. Dan, thank you so much.
Absolutely. Thank you so much, and have a great rest of your day.
Have a great day, everybody. Bye-bye.